How would you feel if you watched a crucial, niche-dominating asset get pulled into a harsh multi-month falling trend, flashing clear sell signals across almost every single technical moving average, while a small group of highly specialized traders insisted it is completely undervalued? Welcome to the wild, fast-paced world of tokenized assets, where foundational semiconductor supply chains and decentralized blockchain markets collide. Today we are looking closely at AXT Tokenized stock, trading under the ticker symbol RAXTI, currently ranked around number 3209 in the broader digital asset space. Right now it is sitting at $64.03, pushing a 24-hour increase of about 0.56%. But do not let that completely flat single green day fool you into making a hasty trading move. Behind this tiny daily bounce lies a massive macro debate dividing the community. Is this a rare, deep value buying opportunity in the world's most critical compound semiconductor substrate manufacturer? Or are we looking at a classic bull trap designed to catch retail investors completely off guard? Before we unpack the technical charts, the order books and the fundamental data, make sure to hit that like button, subscribe to the channel right now, and turn on notifications so you never miss an urgent update on these high volatility moves. Also, it is absolutely compulsory today to leave your comment below. Tell me, do you think RAXTI is a hidden tech gem ready to explode back toward its previous highs? Or is it a sinking giant that will pull your portfolio down? Seriously, leave a comment right now, because the algorithm needs to see where the community stands on this asset. Remember, absolutely nothing in this video is financial advice. We are analyzing the market trends, the sentiment, and the pure data to see how this plays out. Let us get straight into what is actually going on behind the scenes here. To understand why this tokenized stock is suddenly in sharp focus, we have to look at what the underlying company actually does in the real world. AXT designs, develops, manufactures, and distributes high-performance compound and single-element semiconductor substrates. They specialize in indium phosphide, gallium arsenide, and germanium wafer substrates, which are absolutely essential hardware building blocks for data center lasers, 5G and 6G communications, satellite solar cells, and advanced optoelectronic devices. If major global chip makers or tech platforms want to enable next-generation optical connectivity or build high-powered infrared sensors for consumer tech, they literally rely on the materials provided by AXT. The crypto asset version, RAXTI, experienced a major run-up earlier, driven by deep euphoria surrounding the global artificial intelligence data center build-out and massive demand for optical transceivers. Because of that immense global relevance, entities tokenized the stock to allow crypto traders to gain exposure to its price movements 24 hours a day, 7 days a week on the blockchain. But recently, things have taken a sharp, painful turn. The initial hardware-driven market euphoria has cooled off, global wafer inventory levels have shifted, and the market is forcing investors to face a grim reality. The asset has faced a rough patch, and that is exactly why the crypto version RAXTI is experiencing a tense, exhausting tug-of-war between aggressive buyers and stubborn sellers. Let us dive deep into the technical analysis because the charts are telling a very fascinating, almost contradictory story. If you look at the medium to long-term trend, the underlying asset has historically been locked in a punishing downward channel, which originally signaled strong institutional pessimism. But when you zoom into the short-term picture, the immediate momentum tells a highly dramatic story. The Relative Strength Index, or RSI, dipped heavily into deeply oversold territory, flashing strongly negative momentum before this sudden daily bounce. This means that while sellers have been aggressively driving the price down over the last few weeks, a short-term burst of tiny buying volume has suddenly stepped in to keep the price stable above $64. Right now, the asset is trapped between a key psychological support level at $60 and a major overhead resistance ceiling around $72. High volume historically came in at the absolute price tops, meaning there is an enormous amount of overhead supply, leaving a lot of traders holding heavy bags at much higher levels. A definitive break below $60 could trigger a massive cascade of stop losses and liquidations, while a clean break above $72 is required to prove that this daily 0.56% pump has actual structural legs. Right now, the short-term weakness is battling long-term horizontal structure, leaving day traders on absolute high alert. This brings us directly to the ratings and the technical signals, which are causing a massive wave of anxiety across the trading forums. While some traditional Wall Street analysts hold on to their long-term buy ratings based on the company's undeniable material science mode, the immediate technical indicators are flashing sell and strong sell signals across multiple high time frame charts. Prominent institutional firms recently downgraded their stance from buy to hold, citing severe short-term valuation concerns. and an ongoing cyclical slowdown in legacy communication and automotive hardware spending. Furthermore, the company has faced significant fundamental hurdles, including missing revenue guidance expectations for consecutive quarters and dealing with geopolitical manufacturing exposure since much of their production operates in international facilities. When you combine negative technical momentum, short-term moving average sell signals, and institutional downgrades, it creates a massive suffocating cloud of negative sentiment over the short-term outlook. So, is this asset genuinely undervalued, or is it a highly dangerous value trap? The answer depends entirely on which side of the order book you choose to look at. The crowd calling it undervalued points to the massive technological moat, the growing necessity of optical computing, and the fact that data center expansions are expanding exponentially. They firmly believe the current pullback towards $64 is an absolute gift, a natural, healthy market correction that lets smart money accumulate shares of an essential chip material pioneer at a massive discount before the next big macro leg up. On the flip side, the bears argue that this is a textbook value trap. They point out that retail traders often get trapped in these legacy deep tech assets because they only look at the historical high prices and assume a dip automatically means it is cheap. They completely forget that slow cyclical execution risks, complex manufacturing yields, and high macroeconomic interest rates can keep a material stock depressed for a very long time. Retail traders buy the dip, expecting a rapid recovery, only to watch the support level crumble beneath them. Let us break down the exact brutal risks you are facing if you choose to trade this asset on the blockchain. The first major risk is extreme unpredictable volatility. Tokenized stocks often trade with different liquidity profiles than traditional equity markets, meaning price swings can be much sharper and faster, especially during off-market hours or weekend crypto trading sessions when traditional stock exchanges are closed. The second risk is severe geopolitical supply chain vulnerability. Because AXT's core production facilities are concentrated internationally, regional regulatory shifts or export restrictions on critical raw materials like gallium can wipe out millions of dollars in potential revenue overnight. This is precisely why retail traders get trapped. They chase the generic hype of AI and microchips without realizing that political regulations and capital hardware material cycles can drag the price down for months on end, regardless of how essential the underlying technology sounds. To weigh this setup properly, we need to look at both the best case bull case and the worst case bear case. The best case recovery scenario, the bull case relies on a few major things going right. First, the asset must firmly hold the $60 support level and consolidate to build an accumulation base. Next, the underlying company needs to report a massive surge in substrate bookings, proving that the semiconductor capital expenditure cycle has officially bottomed out. If they report a surprise positive earnings beat, or if a massive industry catalyst ignites the microchip material sector again, RAXTI could easily break through the $70 resistance and rapidly target the $80 to $90 range, rewarding patient buyers with massive gains. Conversely, the worst case continuation scenario, the bear case, is quite grim and painful. If the short-term negative momentum continues to dominate the markets, the $60 support floor will shatter completely. A clean break below $60 opens the door to a rapid drop toward the next major technical support levels, potentially dragging the price down toward the $45 to $50 mark. If the company continues to miss earnings, faces harsher international material export bans, or suffers from ongoing factory build delays from their major tech clients, the institutional sell signals will intensify, and the short-term downward trend will simply continue lower, leaving late buyers with heavy long-term portfolio losses. Looking at the outlook, there is a massive confusing disconnect between the short-term and the long-term. In the short term, the perspective is highly cautious, if not outright bearish. The technical indicators, the geopolitical headwinds, and the recent downgrades suggest that the asset could face continued downward pressure or painful sideways grinding before it ever finds a true bottom. The short-term trend is firmly in the hands of the bears until proven otherwise by a massive influx of buying volume. However, the long-term perspective offers a strong glimmer of hope for the patient investor. If you truly believe that advanced semiconductor lithography and optical substrates are the absolute foundation of the future global digital economy, and that this company will maintain its early substrate hardware advantage over the next decade, then the current short-term weakness is just noise on a long-term chart. But surviving that short-term noise requires an absolute stomach for massive risk and high volatility. This brings us to a massive critical point of uncertainty. The market is standing at a dangerous crossroads, and no one can say with absolute certainty which path RAXTI will take next. The daily fractional bounce shows that buyers are trying to stabilize the floor, but the overwhelming technical sell signals suggest the downward pressure is far from over. Are we witnessing the final capitulation of weak hands right before a massive institutional reversal? Or is this minor bounce just the quiet pause before another devastating leg down that flushes out the remaining retail buyers? The charts are locked in a tense standoff, the data is conflicting, and the next major move will undoubtedly catch a lot of people completely off guard. What do you think will happen when the market opens up tomorrow? Will the $60 floor hold strong, or are we about to watch it collapse into a sea of red?